And one, we are live. What's going on, everybody? Welcome back to Wolf. It's good to see all of you here. Bitcoin literally in shambles, it seems like, on the timeline especially. We've got all of crypto down. Ethereum went just below 3,000. I think it's recovered it. Bitcoin in and around 91, 92, 93 range or something like that. We've got the stock market we're going to talk about a little bit. We're going macro. I have Mr. Dave and Robert to join me today. So this is going to be a fun episode. Robert, how are you?
Good. How are you?
Doing well. Doing well. Dave, how are you, sir?
Yeah, as the sign says, I was just out walking along the water with my dog. You know, it's like it's a beautiful day in Miami Beach, and I'm going to enjoy it and not really give a crap about what's going on here because it's kind of playing out sort of like we thought it might play out. Admittedly,
Definitely.
Bitcoin started sooner, and crypto has gotten much more wrecked than I expected. But it's starting to ripple effect through the rest of everything else, as Robert will go into. And what does that mean? If I was doing the memes, it would be one of the old ones, which I'll dig up, and you'll see my background change to when I think it's appropriate.
I'm looking forward to it, and I'm looking forward to the conversation. For everyone who's tuning in back at home as well, please do repost the stream and leave us a comment. If you're in the chat, definitely let us know if you guys want us to have a look at anything or have us pull up a chart or anything like that. Definitely let us know. Otherwise, Robert, I'll pass it to you for kind of what you think is top of mind, most important to talk about today in the macro side of things, whether it's crypto or if you want to zoom out a little bit more. I'm curious to see what kind of things you're seeing. I saw you on Spaces earlier too.
Yeah, man, it's there's a lot going on. So I think it's a bit interesting that we've had the S&P 500 and the NASDAQ struggle so much here recently. That's kind of started to give me a little bit of pause. Generally, we haven't seen this much of a kind of digestion. I would say digestion on the weaker end of the range. If you look, S&P 500 has basically been flat for a while, and we're hanging out towards the bottom end of that range, kind of more than I would like for a huge bullish sentiment. And you look at Bitcoin being kind of a leading indicator of liquidity and risk, and that's obviously not been doing too well. SOFR spreads are like relatively contained compared to last week that we talked. We did have kind of a evolution of that timeline where the Fed called basically an impromptu or hastily arranged meeting. That's the FT's characterization with the primary dealers and maybe some depository institutions on the sidelines of the annual Treasury conference that I think was in Dallas, maybe somewhere in Texas, I think. And so I think the liquidity picture is starting to really concern them if they're holding impromptu, hastily arranged meetings. And that's not me saying those words, that's the FT, who's not exactly one for hyperbole. So yeah, standing repo got tapped this morning for about $2.5 billion, and then again this afternoon for $3 billion. So yeah, you couple that with the fact that 25% of financing in SOFR has been done above the discount window rate and above the SRF interest rate. Right now it's 4%. About 25% of the volume has been transacted above the Fed's upper bound over the past 4 days. And so I think that's interesting. There's literally a financial disincentive to do that. And yet you're seeing that kind of degree of premium being baked into SOFR. If you look
Can I ask a question, Robert?
Yeah.
Does that indicate that the Fed cutting rates has less impact than liquidity? Because obviously if it's trading above its range and they cut, wouldn't they just be trading more above its range if in fact the reason is a lack of liquidity?
Yeah, the Fed cuts haven't really been doing much. Actually, if you look at so SOFR is about $3.1 trillion per day. That's secured overnight financing. If you look at the Fed funds, which matters much less nowadays, but that's the interbank unsecured overnight lending. It's only about $80 billion per day. If you look at that interest rate, that kind of equivalent to SOFR, but for unsecured funding, that's been creeping higher, despite the fact that the Fed has been cutting interest rates for the past couple meetings. Fed funds has actually moved 5 basis points higher relative to the lower bound, which is reverse repo award rate, we've actually had Fed funds tick higher by 5 basis points, and is pretty close to the upper end of the range that the Fed likes to set for the Fed funds. The range there being IORB to the top, and then RRP to the downside. With SOFR, you can kind of think of the upper bound as discount window or SRF, which is 4%. But if you look at the unsecured, like interbank lending, that's starting to tighten as well.
Sorry, dog and cat are fighting because they want to get an early dinner.
I was wondering, I was like, what's going on over there?
My dog and my cat are kind of, they get along really well, but at dinner time they get persnickety.
Or when they hear Robert talking about SOFR, they're like,
no, I don't think they care about that. I mean, look, there are time bombs in our financial system that we continue to ignore. We've talked about commercial real estate, at least I have with others, to death. If you look at the one that I think I am actually amazed that no one's looking at, it's the yen carry problem. And because essentially, if you look at, remember the little freak out the market had about a year ago, August, that was because the fear was the yen going over, the JGBs, the 10-year bond going over 1.7, and the yen weakening would cause people who have the carry trade on, which are short yen and long dollars, long yen, short yen, whatever, that the trade could unwind. And the truth is we're at the levels that were sparking panic a year and a half ago. Sure, there is a swap line out there between us and Japan, and I guess people understand it isn't going to be there. But Tokyo just announced this massive, to them, stimulus package, and I haven't heard anyone talking about it. I just find that amazing. I mean, the only thing that it signals to me really is the entire world is doing this. It's the need for liquidity is going to become obvious. And I don't think that people truly understand just how committed this administration is to papering over and or making sure that whatever growth they can get to try to help out the fiscal situation will be stimulated. I mean, you talk about Stephen Moran like he's an idiot. I talk about it and look at it and say, I'm not sure I'd do anything different if I had the levers of power given where they're at. You always have to look at the self-interest of people who have power. And the self-interest of this administration is undeniably to have the economy, to have people feeling better than they do today by a lot in a year from now, a little bit less than a year from now, and 10 months from now, when voting really is kicking in the midterms. And that's not going to happen organically. At least I don't see how it could. So that to me is the issue.
Yeah, and the 30-year JGB's gone straight. The yield has gone straight vertical for the past 2 weeks.
Yeah, and that's not. I mean, you could make an argument that it's good for them, that it doesn't really matter, but they care about it, right? They certainly do. Yeah, they have a ton of a very old population on fixed incomes.
Yeah, and also at a certain point, they've been huge creditors to the U.S. From running such large current account surplus for so long, for decades. They've been buying, tech stocks and U.S. Treasuries and various dollar-denominated assets that there's a certain point. Look, if the 10-year JGB is yielding 10 bips back here in 2018, they're not going to be buying JGBs, but they'll be buying U.S. Treasuries. But at a certain point, you would think that there becomes a level at which some of that capital starts to go back home.
Well, here's the point, Robert. The point is simple. They buy more. They already own 40% of the JGB market, right? Or thereabouts. Yeah. They buy more when they think that they can do so will help control consumer inflation in their country. Because the one thing that the Japanese electorate literally cannot take, it's consumer inflation in this low growth scenario that they're in. They just can't. And that's why you have a new government there. And it's a very, very big deal. And so we'll see what they do.
Inflation's at 3. Right.
So you know, it's unclear what their policy response will be. What is clear is that Japan is not going to be restrictive on a fiscal basis for sure. They've already indicated they're going to be extremely accommodative. China is indicating they're going to be accommodative. We know that apart from a tweet here or there that where Trump says, "Oh, the budget deficit," we all know that there's only one way that he can help the budget deficit, and that's by massively above trend growth, increasing tax receipts. That's it. That's the only way. Not with the way the bill that was just passed goes. That is literally the only way. They're not cutting spending. I wish they would, but it doesn't seem likely. Well, I wouldn't say they tried. I said they had the right agent of change, and too many Congress people realized that their yachts and their nannies were going to be threatened by the fact that they didn't want their family to lose their $500,000 NGO job. And, you know, I hate to phrase it that way, but, you know, I sort of said, I told you so to people. I said, listen, this is both parties. And unless Trump is able to control his party, and I don't think he is, people aren't going to give up. If you're a congressman, then and 3/4 of your family's income is coming from a nonprofit job that your wife has. And I just described a non-insignificant number of people. And it's worse. There's wives, there's kids, there's brothers and sisters. I mean, there are thousands of these organizations, and they employ. I mean, think of it this way. This is almost inconceivable to me. I always remember meeting people who I thought were pretty intelligent people, and you said, "What do they do for a living?" "Oh, I'm a staffer for such and such a congressperson." And before that, I was a staffer for such and such a congressperson. Before that, I was a staffer. And you sit to yourself and you think, well, wait a minute. I would think of a staffer sort of the way my naive way of looking at it was a staffer was sort of like a clerk for a judge, which law students do after law school in order to get experience. But no, it's a career path. Why? How could a staffer who makes a lot less, doesn't make that much money, be a great career path? Well, the answer is two reasons. First, their families are just as connected to the whole NGO nonprofit political system as the members are, because frankly, anyone who knows anything about Congress knows you go through the chief of staff of every member or every senator to get things done. And some of them multiple chief of staffs for multiple committees they sit on, right? So, you know, that's a big deal. So they're going to be on the receiving end of a lot of things. And, you know, maybe the answer is a lot of these guys end up as lobbyists or working for the industries that they spent their time helping. This is the way the system works. And when you understand that, you understand that's why everything is so effed up. And you start understanding the infrastructure, the stuff underneath it. But when you have that system, if you cannot change it, the only thing you can do is to do what Gary Cardone says, which is extend and pretend. What's the best way to do that? Goose growth and make everyone feel like things are better. And if you do that in a way that puts most of everything into asset inflation, your single big problem is housing, because every other asset going up. If you're not an asset owner, do you really care if you have the most recent iPhone, all the Netflix and other subscriptions that you want, you get to eat well, yeah, you know, you're living okay, you know, do you really care? Probably not. Home ownership, though, is a big deal because that's been sold as the American dream. And so, Robert, you use the word K-shape economy, and the largest reason there's that big ass difference in the K is because people just starting out can't afford to buy what used to be the thing that told you that you were a real American. And that's a big deal. And that's a direct result of policy.
The single largest driver of individual wealth being the home. Because it's not really the home, it's the leverage, really. Levered exposure to something relatively scarce. So yeah, like people I know they're not quite at the Discord election, Myanmar, or where was that? Nepal. They're not quite at that stage yet, but they're pretty upset, you know.
You know,
it is upsetting.
Let me pull this up here. This is kind of in line with what you guys are talking about, because you're talking about like I forget the exact word you used, but this is like top of my. I actually love to get both your thoughts on this. Hopefully you can see my screen now. But Dave, you put out, this is Scott's best post ever, bookmark and reread. And it was just like, it's like the conversation around this bear market, but also the whole question of, are they goofing the numbers or not? And for all of us who are not just watching CNN kind of thing. We're all like, there's something up here, big time. There's something up.
No, there's nothing up. It's complete. I mean, look, there's a bunch of different cross currents. First of all, the price of Bitcoin feels horrible, but it isn't, right? Just it feels horrible, but it isn't, is the simple answer. Adjusted for all the money that's been printed, it's more or less, given back. I mean, it's more or less given back half of what its gains are, or more, right? Well, everything that's printed. 2022 had Terra Luna. We had October 10th. Terra Luna was an actual collapse. October 10th.
Yeah, that was crazy.
Was different, right? Terra Luna was 3 times the size, and lots of people got caught out flat-footed, and that stunk a bunch of things, a bunch of dots. At the same time, we had the grayscale trade going to massive discounts, and that discount caught people who had an arbitrage on, and effectively led to a massive wave of forced selling of funds and firms that had massive customer fund exposures. None of that is true today. So that took it from, if you want to do a forensic analysis of 22, the 60 to 69 level was pure hype. Pure hype. It was 50% interest rates to 100% interest rates to borrow to go long on perpetual swaps. But you can make a really strong argument that 45 to 50 was probably the top end of the non-crazy leverage. But 45 to 50 didn't hold very well. It held for a while, but as the body blows rained down, first 45 fell, then 30 was pretty strong, and then FTX went down, and FTX went 30. It basically got cut all the way to 16 and a half. Although truthfully, it never really was below 20 for any length of time. So effectively what you have is with 3 different waves of forced selling, you got knocked from the 60 level all the way down by 2/3.
Yep.
To the 20 level. Now in today's dollars, I mean, we've printed how much since 2022, Robert? What do you print, about 5 trillion, give or take?
Yeah, about.
Right, on a monetary base, that's about 20, so it's about 25%. So you got to inflate those numbers 25% higher. So 20 is now 25 or 24, 30 is whatever. So you could do that math. And then you ask yourself, okay, well, what's happened? Well, the answer is adoption has continued to move. I mean, you could do any chart of Bitcoin hash rate. Adoption has continued to move up and to the right at a stately pace. The point that the one that I love, and it's just, this is the easiest one to look at. Just look at it this way. It's simple because it's frack. Hold on a minute. Present.
Hopefully this works. We'll see. Maybe Robert's cursed, or maybe it's the StreamYard. Hopefully it's not. Mine works, but David's worked. Oh no, Robert's. We're gonna have to talk about this.
So if you look in 21 before that collapse, the blue line is the fundamentals, the hash rate rebased. You saw it opened up a yawning chasm to the upside. Okay. Before that, when there was all the FUD going on in 20, you saw it went down to the downside. Of course, it recovered. Oh, you've got to be kidding me. Sorry, that's a fire alarm. Hopefully you can still hear me.
Jeez. Do you need to go, Dave?
No.
You can call.
No,
okay.
We have a faulty fire alarm in our
building. All right. That's good. No worries.
In any case, every time it's the black line's gone below the blue line, it's gone back above. Look where we are now. It's literally the widest it's been on the downside since September of 23. Does that mean it can't go wider? Yeah, of course it can. Is it likely? Not too much. And that kind of matters. But the other thing you'll notice is at no point in this cycle, massive upside. This cycle, massive euphoria and upside. This cycle, almost nothing.
Wow.
This teeny little bit in December of last year, right after the Trump bump.
Yep.
It got a bit exuberant, a teeny little bit in August, but nothing, not even in the same zip code as what it did before. And so to me, that's how I look at things. I look at things that way as.
Oh, did Dave just pop out of here? Well, maybe if you have some thoughts on that, yeah. It may have gotten him. Well, hopefully Dave is all right. I'll shoot him a message. But give me some of your thoughts on that, or on this, Robert. Wait, I think he's back.
Sorry, I hit
back.
the leave studio instead of the stop sharing button because I'm a dumbass. So sorry about that.
No worries, you're good.
But anyway, that's sort of my meta thesis. But the micro thesis is simple. It's if you expect and think that there's a lot of pathology in the underlying economy, and you think that forget Trump, forget Moran, forget who's going to be the next Fed chair, that even Powell does not want to be the guy who, as he's leaving, oversees a financial crisis.
Sure.
That they're going to try to get ahead of it. And so I think that people underestimate just how much. There's just a level, it's sort of a raw nerve. He's already been yelled at by Trump, whatever. Does he want to actually have the historians make Trump look right? Think about his personal way of looking at things. Now, interest rates are not the issue here; it's liquidity, and so we'll see how it goes. Anyway, that's my diatribe for the day. I mean, what do you think, Robert? Am I off my rocker, or
No, the only thing there's clearly a liquidity problem. You have like the most important Fed officials, the former SOMA manager, the current SOMA manager, Jerome Powell himself, giving comments trying to warn the market, and then of course the paper they released about the basis trade, reminding everyone in that paper that's financed in the repo market. You have the former SOMA manager, current SOMA manager, Fed chairman, and then this white paper talking about the basis trade being financed in the repo market. Hey, by the way, this is blown up multiple times before. You also have the New York Fed putting out a bizarre post where they show repo borrowing for hedge funds, the amount of leverage that hedge funds are getting for fixed income via the repo market. So like they're clearly worried about something. They had this impromptu meeting on the sidelines of the annual Treasury conference. You look at SOFR spreads, those have been moving higher. If you look at like a 10-day, 15-day moving average, those have been going higher since like basically 3 months now. They've been going parabolic, and the standing repos getting tapped more and more and more. Rate cuts are not going to solve that. So eventually it feels like something is close to, I don't know, seeing the way the regionals sold off today and kind of the S&P 500, what's going on with, like, pull up an NVIDIA chart and look at the 3-month candle.
Do you want to try it again, Robert? It might be that it might have just been the last stream link. Honestly, it totally could have just been that. This may work.
Worked for me, so it should be okay.
Fingers crossed.
Yeah,
for everybody who's watching back at home as well, please do repost the stream and be sure to give Dave and Robert a follow. I tagged them right above the stream.
Yeah.
So highly recommend you give them a follow if you like these conversations. They have many of them on the timeline, whether on Spaces or streams. And look at that, we got it up. Let's go.
Okay, so the NVIDIA 3-month candle is pretty ugly. Oh, it brought some back.
Oh,
earlier today it was like.
Was it bad?
Just this topping tail. I mean, it's on the end of this parabola. I don't know. It just looks pretty bad. And if you look at like other semiconductors, like I think it was AMD, I was looking at similar looking chart. I don't know. It just, you have NVIDIA earnings coming up. SPY does not look super healthy.
What do you think about Berkshire Hathaway putting in an enormous amount into Google?
Yeah, I don't really have too much.
I have an opinion.
Tech stocks.
I think first of all, I mean,
yeah, I'd love to get a quick opinion on this.
If you're holding cash, it's impossible to look at it as anything other than a guaranteed negative return asset. So the sole question is, what's the best potentially positive return asset you can find? And if you look at the valuations, which I think are insane, of things like OpenAI, and put in context where Google is with Gemini and everything they're working on, is Google truly expensive? Probably not. It's like people always forget. They always forget that corporate profits have gone nuts. And which companies have gone nuts the most? The ones that have the levers that are literally capturing the effects that our policies are putting into place. So, I mean, things like Google are throwing off enormous amounts of cash and at the same time has the ability to invest it in what could very well be the winning set of technologies. And so Berkshire Hathaway just picking the biggest, I mean, I would be stunned if they weren't playing that game. I mean, AI is a funny thing because there's two pieces to it, right? There's who's going to make the most revenue from product market fit in delivering AI tech to individuals and corporations that will pay for it. That's thing one. That's the hard question. I do not have a great answer for that. But I think that Buffett is basically saying, well, you know what? Google's a good place to bet on, probably better than cash. Let's go for it. I think it's nothing more complicated than that.
Yeah, it was cheap a couple months ago whenever he probably bought it. It was one of the cheaper Mag 7s on a price to earnings ratio. So.
Right. So, but then the other thing that's interesting about AI, which there are lots of people who are going to feel really stupid in a year, is if you're investing in AI infrastructure, and I mean real AI infrastructure, not bullshit, right? If you have the ability to actually deliver the service of compute and power housed and managed, you are talking about a resource that we are dramatically under-resourced. Dramatically. There's huge demand. Electricity, like things that like people who can do power can figure out how to dust off and get electricity to market are going to be worth a lot more than the old staid utilities of old. Why? Because the amount of power and compute that is needed to create the products that people are literally putting in the projections of revenue for these consumer-oriented companies is off the charts. So you either, if you think about it from a trading perspective, either you should be massively short the consumer sector of delivering AI to people, right? Or you have to believe or be overweight in the infrastructure plays that those companies are going to rely on, with a hell of a lot less upside, admittedly, in all likelihood, because it's not as explosive, but a shit ton less downside, because effectively 3 years of capex is more or less baked in the cake unless the capital markets seize up. Now,
yeah, Dave, look at electricity costs. They're up 40% in the past 5 years.
Of course they are.
And it's only going to get worse.
Well, it's only going to get worse because, we decided to enact policies around the world to restrict use of the cheapest power sources. Not a smart move, right? It's just the way it is. You can say what you want about carbon or whatever. I mean, I guess my view is adaptation is smarter than trying to control carbon. I'd be much more interested in controlling methane, to be honest, because of where it is, but that's a different story. But the fact is that it is a voracious consumer of electricity. And so if you're in policy, what do you want to have happen? Well, I'll tell you what you want. You want to figure out ways to subsidize people's use of power on the individual end so they don't go pull out pitchforks. And at the same time, since most of the short-term employment is coming from the development of a lot of this stuff, you need concrete. You need a lot to build data centers, a lot to build out power capacity, a lot to revitalize the grid. That's where the federal government should be spending their money, and or incentivizing private companies to do it. And so I don't know if they're going to succeed, but I know that's what they want. And so,
yeah, utilities are up 47% in the past 2 years.
Right. And does that sound like something that you would expect in a
utilities? No.
But it makes sense. It makes sense, right? And so you have to put all this stuff. That's why stocks that everyone likes to talk about. Oh my God, look how much IREN ran up. Well, look how much Clean Spark did. What's Cipher? This, all of these things, they are still really small compared to the Mag 7. And yet that sector as a totality is going to be worth at least one of the Mag 7. And it just isn't. It will be. I mean, just the math says it has to be. I mean, he who controls, it's like if you can, it's not like these things are that are commoditized you don't have power and you can't get multiples. But commoditized means non-scarce. And they are controlling what is effectively now a scarce resource. It is literally the opposite of what happened back when you guys were not even, well, were you born yet? Yeah, you were born. but not by much, Robert. In the internet bubble, and people were always talking about the internet bubble because of the website stuff. The biggest single crashing bubble there was the fact that Global Crossing and WorldCom and a whole host of other companies, and by the way, Cisco was the one fueling it, built out 20 times more fiber capacity than was needed at the time. 20 times. Today we are not even close to what we need what we need to now, much less what's projected 3 years out. There, you had to project 5 years out to even sniff potential utilization rates that justified the investment. And yet you got all these fund managers saying, "Oh, well, I remember what happened when Global Crossing did this. I remember what happened when Cisco did this," and they're totally missing the underlying difference. I keep repeating this because I find it mystifying. I mean, I'm sure you've heard that, Cade, because you have a lot of people on your shows, but it's a crazy way of looking at things. It just is.
Yeah, but that being said, I couldn't buy NVIDIA here.
Did I say NVIDIA?
No. But like any of those high flyer Mag 7 AI.
I didn't say NVIDIA. I didn't say the company that is most at risk unless NVIDIA literally owns and has no competition for the chips that are going to be needed to power AI. And in technology, that's generally not what happens.
Yeah, AMD's up 204% going back to the April bottom.
No, okay. I mean,
well, that to your point, there are options for there's not only one chip maker in the world.
No, and they may be the best
for now. Yeah.
I mean, look, I'm not my area of expertise. I did start my life in the tech organization as a programmer, but I never really understood chip architecture.
Oh, you started programming?
Oh yeah.
I didn't know that. Wait, really?
Yep. 1984, I started at Morgan Stanley creating the back office system for something called TAPS, which was their back office. And the scary part, at least as of a couple of years ago, I was told it's fairly likely that code that I wrote back in the 80s is still in operation today. and to say how scary that is I can't. I mean, like I was really good at debugging. I was not great at. I was really good at debugging, and I was really good at architecture. And figuring out how to squeeze the lemon and get as much lemon juice out of that lemon as possible. Like, that was my skill in tech. Yeah, I think I told you I'm writing a book that chronicles those years.
Yeah, you did.
Transition from technologist to in the front office, and there's much hilarity, in terms of stories. But we'll talk about that on a different day.
Yeah, I'd love to hear that one. And Robert, I was gonna ask. So, if you wanted to comment on anything he just said, but also I saw that Wall Street Guru tweeted out a few hours ago what we were doing while we were in the middle of our space, I believe. And they said that the Trump administration will be reviewing a proposal to allow the IRS to access and tax Americans' foreign crypto account data. I didn't know if you had any thoughts on that. Did you see this tweet?
I did.
Let me show you here. Let me pull it up here. And
I saw it, and my thought process is, duh.
What is that? Is that what it was?
I mean, if you have been making money on foreign exchanges that via VPNs, and you think that the IRS isn't going to come after you, you're nuts.
That's a great.
Yeah,
that is a great.
Yeah.
You're nuts.
Yeah, try to get one of those digital residencies that was hot back in 2020, where you can go to Palau. It's like some tiny island nation.
Yeah.
You remember those?
I do. Yeah, I thought about it. I remember when I was first trying. I don't know. I had just seen that tweet, and I was like, I don't know if this is a big deal or if this more feels like a big deal, like a good tweet, but it's not actually a big deal kind of thing. And I got the sense it probably was, but I wanted to crack it open here.
I don't think it's a big deal because it's a big. I'll tell you where it's a big deal. If you believe, as I do, that a lot of people in the United States have used DeFi over the years and paid basically DeFi is way more expensive way of trading than CeFi. It just is. If you have decent software and you know what you're doing, I'm not going to even argue the point. It's just that the numbers are crazy high. Now that's not true with perp dexes. That's different. The perp dexes actually are far more because those are order books based. But I'm talking AMM models with all the MEV, issues and the spreads, etc. The biggest reason people used it was because they figured the IRS would never see it. And it's tax arb. And you know, honestly, I never did it once, not once. Why? I do not ever, 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 ever want to screw around with the IRS.
Yeah, me either.
I mean, if you look the number of criminals, I'm obviously not a criminal, but the number of criminals who met their demise because they couldn't match and the IRS found them is a long list. Al Capone being the most famous, but there are plenty. It's just things not to do is screw with the IRS.
Yeah,
It's bad enough for what happens if the accounting is so damn difficult that you might potentially be wrong in your guesses, but make a good faith estimate. And then a good lawyer will help you. But you know, if you like said, oh, I didn't know I had to report these $10 million I made trading crypto on Binance when I had my VPN, good luck with that. Because if they find it, if it ever comes back into fiat, you're going to have to do source of funds and someone's going to want to poke at it. There's a risk. And so does this really change anything? No. What should they do? Well, I have lots of examples of things of what they should do, you know, in terms of capital gains and whatnot. But no, I don't think that anybody should be surprised by that. I mean, the government wants to close the deficit, man.
Sure.
I think they're going to get rid of once clarity is done, that wash sale exemption is going to go away as well. It should.
Yeah.
It's literally absurd. It's nowhere near as big of a deal as people make it out to be. I mean, Elizabeth Warren says, "Oh my God, you people are so evil." I mean, come on, it's a trivial thing. But the notion of being able to sell it and immediately buy it back to lock in your loss, I mean, is that really a big problem? No. But they're going to get rid of it.
Carried interest, probably.
Well, carried interest is different. That they should get rid of. And they should also get rid of stepped up basis on inheritance, but inheritance taxes should be much lower. And they should absolutely get rid of the ability to borrow against appreciated securities and not pay taxes on the capital gain that you borrowed against. They should get rid of that. But if you did that in a revenue neutral way, you could cut the capital gains tax probably all the way to like 12 from 20. I don't think anyone would really complain or say that wouldn't be a major jump starting or starting.
How do you cut capital gains when it's already half of what, if you work for a living, right? You're paying double the rate of if you move money around, make money.
Well, no, moving money around, you're paying ordinary income. It's only when you hold it for a year.
Yeah, for a year.
If you're doing anything leveraged, nope, it's not eligible for that for the most part. Futures, options, it doesn't get treated that way. You hold it for a year, it's a different story.
What about
that's why the wash sale thing is so important.
Yeah, but like the equity trade. Yeah, I don't know. I feel like capital gains is kind of low compared to what income is taxed at.
Well, you have to understand something. Capital gains is double taxation in most respects. Because maybe not to the individual who did that, but where the money's actually going, the income's already been taxed. And the other problem with capital gains is that it is not indexed to inflation. So if you have dollars and your choice is let dollars go away by 10%. So over a period of time, you're holding something, the dollar's been depreciated 30%, and you have a 30% gain. Why the hell should you pay any taxes on that?
Yeah. No, I mean, agree with that.
So if the only thing you did is index long-term capital gains taxes were the current level with an extra deduction on inflation, but at the same time, you got rid of the mega rich people being able to borrow against their assets. I mean, Jeff Bezos doesn't sell stock; he borrows against it.
Yep,
S-blocks, yeah, and it's at a very low rate too, right?
Well, of course,
because it's collateralized.
It's a way over collateralized, and that's fine. We don't care. But the whole thing that I find amusing, all you have to know about hypocrisy, you'll understand this. All the people who have talked about, oh, I shouldn't be paying less taxes than my secretary, who are some of the biggest proponents of saying that, are some of the biggest users of this loophole, Warren Buffett being one of them.
Oh, wow.
Ask how many shares of Berkshire Hathaway Warren Buffett has sold. Right? Ask yourself. Yeah. Don't know for sure that he's borrowed against it, but would be stunned if he didn't. Stunned.
Yeah, probably. Yeah, even a little bit.
If you and by the way, who are the biggest donors to the Democrats? Well, people who do this. So why do you think that they don't advance this? The only Democrat I've ever seen advance this as policy idea is Bill Ackman, who's obviously not a politician. Who would hurt because I'm sure he does it too.
Sure.
But that's okay.
Robert, go ahead.
Robert, you hear us?
Yeah.
Well, I was going to say,
were
if you wanted to
asking about
respond,
the 2000
I
the
was
stimmy
going to ask for
check
both. Yeah, I didn't know if you wanted to add anything to that, but also, yeah, there's going to be apparently $2,000 dividends in the middle of 2026. I remember Bissett went on right after he said this a week or two ago and said, well, it might not be exactly checks. It might be, you know, a slew of different things. But this came out today. I didn't know if this was a brand new thing or if this is just Bitcoin archive farming, you know?
No, there were new comments. I saw
Okay.
it too. Yeah, I think that they're trapped. I think that people are unhappy. I think people are miserable. I think especially young people that can't afford to buy a home that we were talking about earlier. I think you know, people want a pound of flesh. The economy is not that great unless you're building data centers, you know, or an employee of one of the few remaining employees of a Mag 7 company. Yeah, the economy's not doing great, and people are unhappy. And $2,000 stimmy check, like, look, it's bullish for nothing stops this train. It's bullish
Literally.
for inflation. It's bullish for Bitcoin.
But doing it as tax refunds is a very big difference. It basically means that nobody who doesn't file taxes gets it.
Yeah, that's true.
Wow.
That's
And what we saw, and
Wow.
look, I had a front row seat to lots of people who didn't file tax returns, lots of people who, well, whatever, what happened when you handed stimmy checks to them in the last in the pandemic. I'll never forget our trip when we moved to Miami Beach in the middle of the pandemic, right after the first round of stimmy checks came out. And we had to drive through Lumberton, North Carolina, and couldn't get a hotel room. Ended up in some absolute, it was so bad. My wife claims the dog was afraid in some place in South Carolina.
Oh, Lord.
And when we asked the people why it was that every hotel was sold out, it was all people got their stimmy checks and they're ready to party.
God.
So random people were like going to random hotels to booze it up and party on their stimmy checks.
Or put it in
That is
AMC.
not the people who the administration wants to put money into the economy for. They want people who are going to invest it and vote and pay taxes and whatnot. So don't be surprised. At least they've learned a little bit. I still think it's a terrible idea, but
It's still going to be very high velocity money.
That's right.
I remember I threw part of mine into the, I believe it was that money, or I know I threw a good amount of money into Dogecoin right before everything ran up. And I don't remember if it was from the stimulus check. I just knew I had an extra few $100. That ended up being what kicked me off into the industry, literally. And I lost all that money, of course. It ran to like 20 grand, and then I threw it all into Cardano, and then Cardano crashed the rest of the market in the middle of 2021. And I was like, well,
hey, look, Farcoin's below a quarter.
Oh,
that's good.
Lord. Robert, I know you're stacking Farcoin.
Bonk.
That's
so on my crypto watch list, I have Bonk and
So
Trump.
my biggest
Trump
loser
and
is my biggest loser is Clearpool.
Clearpool.
Wait, not loser. I'm not in it. I just watch
I see.
It for
I've
to keep a pulse.
Of various things that I have that I still hold on to from old bags.
Brutal.
You know, it's stuff like that.
Trump coin looks so bad.
Well, good. I don't own it, and it's never been issued.
I thought about opening a short and just leaving it open forever and being like, "There's no way it'll come out." It has continuous unlocks. Like it will continue to drop.
I thought about it and decided
still maybe should.
There's an old movie called War Games, which is is an absolute classic, and the line from that is a silly game. The only way to win is not to play.
It's so good. War Games.
That was what's his name? Michael Burry tweeted. He said something like, sometimes the only game is just to sit back and exit the game or not play or whatever it was. Just play your cards back in.
Yeah,
that's why I've been building cash for like 3 months.
Really?
It's just nothing felt right other than to pay down debt. So I pay down like a lot of debt, like tens of thousands of dollars of debt. So I'm basically debt free.
Nice.
So I don't have that hanging over my head. That felt right. The only other thing that felt right the past 2 or 3 months was building cash. So I
made the mistake that I took some money and net, I think I basically am about in the same position as if I think I'm slightly better than cash because I did buy some iron and some stuff at much lower prices, but I gotten crushed on MicroStrategy and crushed on, I think down on Bitcoin. My average, I'm down 10%.
So I think MSTR
on that.
I think Cade, I forget if it was with you. I mean, I've been like very, very skeptical going all the way back to.
It was.
This is this is like the time where I'm thinking about buying some.
Yeah,
Really?
my cost
Okay.
basis in one of my accounts is still lower than this, but in a bunch of others, it's above. So it depends. Is the short
I
answer.
think we're
I
very
think that
close.
Can you
look.
pull up that chart, Robert?
It
by
will
chance?
massively
Yeah.
outperform in the next if there is a big rally, and it will continue to underperform if there isn't.
Yeah,
It's that simple. But it won't underperform as much because most of that is already done. Could be another 10, 20, 30%. That's about it.
I've got the chart pulled up here, or Robert has it pulled up here. Wow,
Yeah,
good
it's
Lord.
got that.
Wow.
It's got that like waterfall sort of action that I like to see for capitulation. Let's see what the volume looks like. Yeah, volume's starting to ramp up. So
wow, look at that.
We're like, this is probably gonna end up being a good buy. Say,
and if you look at it from the
road.
MNAV perspective and what they can actually do, I mean, look,
yeah,
it's of course not it's not path independent. If Bitcoin stays between, if Bitcoin goes to 50 from here, if it gets cut in half, MicroStrategy is going to be down by your line stack back here. It's going to look, it will go lower than it was in 23. That will happen. If Bitcoin, on the other hand, holds in here, finds its floor, liquidity comes into the market and takes back off and ends up back at all-time highs or above, MicroStrategy is going to massively outperform that.
Wow.
It has to go above. So it's really a question of what do you think is going to happen?
Did you see Peter Schiff's tweet?
He
said he thinks. You see, Peter Schiff tweeted. I guess they're going to be at the. It might have been rage bait, but Peter Schiff had tweeted and he said he believes that MSTR's entire plan is a total sham. Let me see if I can pull the tweet. He basically it's a total sham.
Peter Schiff believed Bitcoin should go below 1,000. He's been saying it. He needs to go to 0. If Bitcoin goes to 1,000, MicroStrategy's toast.
Yeah.
So anything Peter Schiff says about MicroStrategy, you have to understand. If you he's right in a sense. If Bitcoin goes to $1,000 or below.
Oh no, it was his. He said specific, and this might, like I said, it might just be rage bait, but he said specifically. I'll pull it up here. That the business model is a fraud. He said, and he'll be. Of course, this might just be
he's wrong.
Up,
I mean,
debate here,
his business model. He's so transparent about it. It's his business model is he thinks Bitcoin will outperform. Will have a CAGR over a long period of time that is dramatically higher than 10%, and so he wants to buy it. And the truth is, if he's right about that, he's right. And if he's wrong about that, he's wrong. It's that simple. There's nothing fraudulent about telling people what your model is, implementing it. And if people want to go along with them, then they should go along with them. If not, not. I mean, it really is. If you believe like I do, that Bitcoin is 90% undervalued in the next decade or two, then that's going to massively outperform 10% a year. Then it's far from a fraud. But a fraud would be, I am generating my returns through a magic wheel that I'm not going to tell you how. And oh, by the way, here's my cash flows, and I'm not telling you how. And it turns out that the how is a Ponzi scheme you're stealing from others, or the how is I was stealing customer money and making big bets with it, and I was printing my own coins, sound like Sam Bankman-Fried. That's fraud.
Yeah.
Fraud is when you say X and you're doing something else. Saying one thing, doing something else. That's fraud. You could love or hate Michael Saylor, but he says this is what he's doing, and he's doing different things along that vein to try to maximize and be Pareto optimal along that particular demand curve. But that's what he's doing. And that is the exact opposite of fraud.
Yeah,
doesn't mean it's going to work, but it means it's the exact opposite of fraud.
Robert, so you're buying some?
I kind of, it looks, this is kind of what I've been saying. What MNAV drop below 1. I haven't looked at irresponsibly long MSTR group, but I'm sure if they're on mental health watch, then that would be point 2 in the criteria. MNAV below 1, mental health watch.
The line I use, one of the things I love, there's a line that Mike McGlone uses. Of course, he doesn't like it because now I'm throwing it in his face. But you should be buying when they're crying.
Yep.
Oh, yeah, that's good.
Yep.
That is
exactly right. That's exactly right. And it's got that waterfall sort of like real sharp acceleration in the selling pressure, and volume is starting to kind of like look capitulatory. I think it's pretty close to like, for the first time in 12 months that I've been like mildly bullish.
Are there any others, Robert, on the Bitcoin or non-Bitcoin, like whatever treasury companies at all, or ETFs even?
What's the other one? Naka?
I guess it's another one. I don't think I haven't seen that many people excited about it. Metaplan is the only other one that I really hear people still talking about in a positive light for the Bitcoin.
Kindly has gotten crushed.
Yes.
Wasn't this like a healthcare company that was doing Bitcoin treasury stuff?
Naka?
Am I tripping? Yeah. NAKA? Maybe I'm wrong.
To be honest, no, that was Semler, I believe.
Oh, okay.
Semler Scientific, SMLR.
Ooh, but, God, yeah, Metaplan looks horrible too.
I know. That's what I was thinking. Like Metaplan is the one where everyone's like, we're still early. We're going to be the. I think the founder of Metaplan multiple times has said, hey, like they're very similar to like an Amazon story, and I'm like,
I remember this crazy price action here. I remember people were like doing crazy irresponsible things with like home equity loans. I remember so buying at 14, 15-ish, and it's down at 2.
Jeez, dude. Yeah, the treasuries are.
Yeah,
I mean, Nakamoto, if you want to talk about treasuries, I mean, talk about a bad trade I made. Thank God I made it tiny. It was tiny.
Really?
But yeah, but I'm keeping it just so I could see just how bad it is. And eventually I will farm it for it. At the end of the year, I'll almost certainly farm it for a tax loss against something that I want to.
There you go.
Wait, Naka, right? You said Naka? Yeah. So,
and they failed to, they evidently failed to make a filing today. That's just crazy.
That's not good. That's not good.
I mean, I was so critical of the management of what Bailey was doing earlier. And then I thought, okay, and the stuff he said recently was like, okay, I at least understand that. But this, oh my God, do you understand how horrible that is? Particularly if your business model theoretically is not complicated. Yeah. I mean, if you're trying to tell people we have an uncomplicated business model, we don't have a lot of overhead, you're buying the Bitcoin we have, yada, 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 and you can't even make an SEC filing, it's a big problem. Yeah, I'm sorry. I'm not going to excuse that one ever.
Yeah, that one's rough for sure. I've seen, who was it that was going back and forth on Twitter? I think, I'm not sure. It may have even been Mike Alfred, and I asked his thoughts. He was just like, no comments.
Yeah.
Like, I don't got much anything good to say about it.
I like Mike. And Mike it's funny because he's been so famous recently. He gets a lot of abuse from people. I mean, look, I know the guy. He's about as straight a shooter as you're ever going to find. Right. You know, he tells you his vested interest right at the beginning of every single bit. You may not be right. He may be wrong, just like me. I freely admit information, things change, right? You know, but right now I see things very clearly. I think I see that a liquidity driven sell-off at a period of time when the single biggest threat to Bitcoin would be if it went straight up and none of the holders sold, such that institutions had no ability to buy and accumulate it, and we couldn't get a distribution into the hands that it needs to go to in order for it to continue to rally. And so, you know, when I make points like that, people are like, I don't understand what you're saying. I'm saying, listen, gold, if in the Indian culture, everyone buys gold necklaces and gold souk, this, that, and the other, gold has had 5,000 years for people to understand its value.
Got it.
But platinum used to be 2.5 times the price of gold because it's actually 30 times rarer and more valued. If you went to a conference, the gold level, there was the silver level, the gold level, and the platinum level.
30?
What?
30 times?
Yeah.
Wait, whoa! I did not know this. Wait, what else? Okay, is platinum like a top play for you guys?
Palladium has way more industrial uses than gold too, which is the other thing. So don't talk to me about industrial use. And in jewelry, my wife demanded when we got married a platinum. Actually, it was on her upgraded ring, a platinum ring, because it was better at the time. It was more expensive and it's more hypoallergenic than most blended golds.
Okay.
Except for 24 karat gold, which is of course hypoallergenic, but it's also very, very weak because it's soft and malleable. In any event, by comparing gold and platinum, you could pretty easily come to the conclusion that about 80% of gold's price is monetary value, not jewelry or anything else. So just take 80% of the gold value in the world, including readily available, readily mineable proven reserves and what's above ground, which is a total about 35 trillion. 80% gets you to about 27, 28 trillion. And to me, that's the pie that Bitcoin's going after. Bitcoin cannot go after that pie if the cypherpunk universe owns 60% of it.
That's
At
true.
most, they can get there if the cypherpunk universe owns 20 to 30%. At most,
Yeah,
probably
distribution.
less.
Yeah, distribution is
So
healthy.
being upset about the fact that the distribution is the height of foolishness.
That's
But
actually really interesting.
understanding what's happening, that it is distribution, is just open eyes. Because and it's funny when I see Bruce Fenton, and I like Bruce. He's good for comedic relief sometimes, but he's also good for making points that people just don't want to think about. And a lot of what he says is thought provoking and interesting. He always takes it so far that people enjoy it. But him going on about, well, I'm not interested in Bitcoin anymore because it's in ETFs, it's in this, it's in that. It's like, well, wait a minute. How did you think it was going to become a global standard? Did you think everyone was just going to ignore? Did you think all the institutions are just going to cede power? No. There's only two ways it could happen: the way it is happening, or a Mad Max. And Mad Max is tough because there's not a lot of electricity in a post-apocalyptic nuclear war. I've read I love post-apocalyptic science fiction. I've read a lot of it. And I can't think of very many of them where Bitcoin or something that's a computerized thing is going to survive.
You want silver and gold.
The closest
and
you
ammo,
get is Star Trek.
223.
The closest you get is Star Trek, which claims to have gone through the eugenics wars and coming out the other side with a computerized, with something that would be digital money. They haven't really talked about it, but whatever. It's hard. I just see that contradiction as major, and that's why I keep saying what I am to people. It's like, listen, distribution is real. We saw a huge amount of distribution when Bitcoin was first hit 10,000. People forget. Paul Tudor Jones made the point in May of 21, May of 20, May of 20. He made the point right after the pandemic sting, after the V bottom, and it was sitting at around 10,000. He said, Bitcoin's the fastest horse in the race because of all the debasement, all the spending, all the fiscal deficits that all the countries are using. And it sat there. I mean, I bought it based on that. Truthfully, that's where I had started earlier, but still a little bit after that is when I finally was able to get all my retirement accounts to buy Bitcoin. It was a process back then. It was really hard. I had to set up a checkbook IRA, all sorts of things I had to do. Anyway, a little bit easier now. But it didn't do a damn thing. Bitcoin sat there between, I think, 8,500 and 10,000. May, June, July, August, September. It wasn't until October that it went past 10,000. It was 5 or 6, whatever. But it was clear that there were holders who had Bitcoin who, when it was over 10,000, said, well, you know what? I think I'm going to lighten it up. I'm going to take some profits here. We shouldn't surprise anyone. The same thing happened at 100,000. And the same thing will happen in every
psychological round. Key
psychological levels matter. I mean, and you can't gainsay it. But anyway, we basically are, I think, 30 to 40% through the distribution. It won't all happen at this price, though.
Right, of course.
But that's a lot, and that's really helpful in the long run. If you believe in Bitcoin in the long term, you want that, and you want to see distribution and hash rate kind of move, kind of distribution, keeping it near the hash rate. That chart I showed you before, as it moves higher. Eventually it ends, and then who knows what'll happen. And I think that's what a lot of the sovereigns who want to be in Bitcoin look at it that way. So
and you can get more Bitcoin for the same dollar. Like, your wages aren't getting devalued. When Bitcoin's going up, your wages, your time, your labor, your energy is getting devalued. You can get less Bitcoin with the same hour of work. Now you can get more. So
exactly. Think of it another way. To get to a Bitcoin standard where people are paid in it and people can't just devalue and whatnot, it needs to infiltrate pretty much the psychological part and the systemic part of the financial world. That has to happen if that's what you believe in. Now, gold is not that. Gold is still only 15 to 18% of monetary aggregates. It's still relatively small. At one point, it was quadruple that, right? Right, a pure gold standard was all of that. So it doesn't mean you can't have loans. So it's not monetary aggregates in the sense of loan money, because you can still borrow against it. We're not going to go to a zero leverage, no borrowing mode, because it's a reasonable business model. Borrow because you have something productive, and that productivity is going to be larger than the interest rate. Is still a good trade. People are going to want to do that, and it's dumb not to do that. I mean, even in Game of Thrones, the Bank of Bravos made loans.
Yeah, that's true. Game of
So, I
Thrones.
mean, all these people who say you can't have a debt in a gold standard, the answer is that's not true. It's just people forget, or they don't like to think about it, or they're not nuanced. But the point about Bitcoin is a Bitcoin standard obviously implies a ridiculously higher price, but
Sure.
it is what a lot of the people that you and I are on these spaces all the time saying, well, look at all the pathologies of fiat money. And it's true. I gave you a lot of it in terms of, politics. They're all bought, right? Not all of them act bought, but they are all bought.
Of course. No, that makes sense.
And so anyway, that's sort of my philosophical take on it. But literally, to get mad because there's distribution doesn't make any sense when that has to happen.
I think it's just literally non-education. It's like naivete. Like they would, like I didn't know until people started talking.
People are leveraged, and
people are betting. People want lottery tickets. I've had so many people during crypto bull run saying, "Why would I buy Bitcoin? I'm not gonna make 1,000x on it."
Exactly.
And I'm like, you do understand that lotteries are called a tax on the poor for a reason.
Yeah, 100 billion per year in lottery.
Oh my God,
it's a tax on the poor. Because people buy lottery tickets, take risks that they know. I mean, it's like, why do casinos? Why are they so popular? It's like, for every dollar, but even in Vegas, in the best casinos, for every dollar put into a slot machine, only 98 cents come out, and in Atlantic City, I think it's 87 cents come out. So obviously, why would people do that? They do it because everybody believes, well, I'll be the one who gets lucky, and if I do, it's okay, and if not, it's just entertainment. Well, the same shit happens in crypto. Let me buy this stupid coin.
But it's interesting. Like I remember going through that phase. It only lasted half a cycle before I realized, wait a minute, this is not going to happen for me. Probably, like this is ridiculous. Like I need to obviously find something that makes sense. And that's how I eventually landed in Bitcoin. I mean, Robert, do you think? I mean, you talk about this a lot with like the silent depression and stuff. Do you think it's more like? Do you think they understand? They're just like,
it's financial nihilism. Yeah. I mean, I found myself almost starting to dip back into that mindset with can't remember the name of the squirrel that they killed, Peanut in New York, the squirrel, right?
Oh, that was great.
My entire timeline was Peanut, and I'm like, you know what, there's gonna be a Peanut meme coin. And so I did. I went and I bought. I had to figure out how to do all that, like Solana and all the whole thing. But I figured out how to do it, and I went on Pump.Fun or whatever.
Oh my God, Robert!
And I bought. There were like 5 different peanuts, and I'm like, which one do I buy?
You bought the wrong one. No,
I bought the wrong one. If I had put that $200 into the peanut that ended up making it, I would have made like $60-something million. Like
we would have never met you.
Absurd amount of money.
You would have been out.
Absurd amount of money. And I just
what would you have done? What would you have done if you had made it? 60 million. Would you have left? Like, would you just never been on Twitter ever again, or what would you have done?
Oh no! Of course, no.
You'd stay on?
No, I would. Of course, yeah.
All right, would have kept Robert.
Of course, yeah. No, it's like you make friends, you provide value. I don't know.
I agree.
It's fun.
Anyway,
I would never leave.
Kate, I'm gonna need to wrap up. I think I told you that.
No worries at all.
I gotta feed the animals who are like now they're just kind of looking at me.
No,
it's that time of day. You think I'm kidding? Hey, Lou.
They're literally.
I remember with the dogs how they get around dinner.
I have my dog and my cat, and they're like furry sharks. This time of day.
That's hilarious. Well, Dave, thank you so much for coming, man. This is a blast.
I hope this was helpful. It's always a pleasure talking with you, Robert. It's nice to be able to see you as opposed to only hear the voice.
Yeah, these are fun. And by the way, for everyone who's watching, please give Dave a follow. He's tagged right above us. And Robert, I'm down to stay on for a few more minutes if you want, if there's something else you want to crack open. Otherwise, good to wrap here. But Dave, thank you so much, man.
Take care, guys.
Yeah. See you, Dave.
And then number 2.
No, I mean, I don't know. I can't explain it. I just kind of have had a feeling the past couple months that nothing really felt right. Bitcoin, but buying Bitcoin didn't feel right, and I'm glad that I didn't buy Bitcoin at 120K. And so I was paying off debt. I would highly encourage people. I shouldn't encourage anything, but just my own personal experience getting out from under that was. There's a mental return that you can't really put a price on to basically be debt-free and have every dollar of income going to potential Bitcoin stacking or whatever you want it to be, right?
Agreed.
So that was kind of what I've been doing the past couple months. Like, I didn't want to buy stocks. Like, are you kidding me? Yeah, I mean, United Healthcare, I kind of wanted to buy at the low, there were a couple. You'll get opportunities, but like nothing. I just never pulled the trigger. It's kind of stacking cash, paying off a lot of debt. So yeah, now I'm looking at kind of Bitcoin falling. I'm looking at carry and financials starting to like be concerning. Maybe we have a bit of a, I don't know, 10-15% pullback or something. Maybe it's liquidity driven, but maybe, I don't know. It's just kind of a feeling that it was right to be in cash and right to build cash and to pay off debt. And I think that, I'm sitting in cash pretty happy with my decision. And
about to be MSTR.
Yeah, exactly. And then now I have all this cash to buy, I don't know, MSTR, Bitcoin. I'm starting to kind of nibble on Bitcoin here, but I think honestly, I think it goes lower. So I'm not buying in real size. But the thing I do want to just like closing thought, I guess, is I saw Grant Cardone put out a tweet or X post. Where will you be a buyer of Bitcoin? And yeah, so like if you go through the replies there, it's all like lower. It's all like 70K, 80K, and it's like that kind of makes me think we're not going to get there.
Really?
Yeah.
That's actually a good observation. I saw this tweet. This was here it is. Jeez, 500,000 views.
Yeah,
I love that. That's a great tweet right there.
Yeah, see, I don't do that. Like, I don't have that approach. I get that
it depends if you're watching the markets like we are, maybe not. But for the average person who's just looking to get into assets, probably just it doesn't have to be Bitcoin, but whatever it is you're stacking.
I still think that the best for the average person, I still think the best way to do it is set up your weekly DCA or whatever. See like people saying 50.
James win, baby.
Yeah, adding 50 to 70K would be like size. You would be adding with size. All a lot lower, right? Like no one was saying like 85, right?
You get that 40K in 12 to 18 months. It's written. I mean,
so
it's possible, but
no one was saying, oh yeah, I'll be buying in size at 85K. It was all lower.
Yeah.
Or most of it was. But yeah, I would say I still think that if you set up a TradingView alert for daily, weekly RSI crossing 30, I still think that that's like the best way to really get a bang for your buck. If you just chart out, I would encourage people watching to just look at go on TradingView, look at every time that Bitcoin's daily RSI has crossed 30.
Are you able to pull that up by chance?
Line. Yeah.
Like what it looks like, just for people who's watching. And by the way, like it's interesting you said that about sort of diversifying where you're putting your money in for a few months there. There was a couple of things I wanted to get. Like I wanted to get into the watches a little bit. I thought there was value there just from a networking side and also just like a dispersion of wealth. Like I thought it was interesting to be able to disperse your wealth in a physical aspect as well. And I was like, well, I'm not going to be really I'm not like dying to buy Bitcoin at 115, 125K. And I was like, well, this is like the only time I'd really be able to sink money into something else and not feel terrible. And so I ended up getting into a little bit of the watches. And I was like, okay, well, for the next few months, I'll just be kind of paying these down a little bit. And not because I'm not going to be full porting into Bitcoin. Like this is, I have another asset I really care to stack. I mean, maybe I get into the hard metals like gold eventually, but currently it really is just Bitcoin. And so I was like, well, this would be like a chance to diversify a little bit to physicals. I think might be a benefit in our game, in the media game, and meeting all these people and stuff. So I was able to get a couple of watches I really wanted to get, and that's sort of how I thought about it. Otherwise, yeah, a little bit of cash and things like that. But it's interesting how people think about it, because if you're in these Bitcoin spaces, you imagine like Robert, I'm sure half the people imagine you're just full ported into Bitcoin 24/7, and then half the people are like, no, I'm sure he's going back and forth, but like. People, I think these streams are good because it gives you a bit of an insight on how you actually are investing and how you're thinking about these things. A bit more in spaces where we've got like 10 different voices bouncing in and out and stuff like that. So I think these streams are great, dude. And I see you got the thing pulled up here. So
yeah, it's generally a really good time when don't do it on like the 1 hour or the 2 hour
yeah.
or the 5
now you're just day trading.
Something.
Yeah,
day
trading.
Yeah. But like, these would have been great buys to like power DCA is what
Yeah,
they
yeah.
call it. So
Wow,
yeah,
look at that,
like
jeez.
I'm looking at the daily RSI right now. Maybe I put 10% of my cash in or something like that. But I do think we probably go lower. I think the S&P 500 probably goes lower. I think that we're kind of in for maybe it's just an intuition thing. I don't know. I can't. I haven't fully fleshed it out, but starting to get kind of a little. Yeah, just a little spidey sense. Last time I had a spidey sense, by the way, well, I've had a couple, but one of the last ones I called a top on the S&P 500 on December 14th.
Yep.
And
crazy, dude. That is crazy.
Where was it? December. It was like right here. So I
Jeez.
If I could have had a 1% stop loss and it wouldn't have hit.
God.
And then for like 5 months, it was basically not invalidated on a weekly close basis. Like it was like just absolutely nailed it. This is not the front month, but yeah. I don't know. I just kind of have a feeling that I don't know if it's liquidity. I don't know if it's something else. I don't know. Just kind of the price action I've been seeing the past like week and a half, 2 weeks. I'm not regretting the fact that I've been building cash the past 3 months and paying off debt.
Sure.
I'll put it that
no,
way.
I think that is the move. Anytime I'm underwater, I'm annoyed as hell. I'm just annoyed. I'm like, dude, come on. Like, because you owe the boogeyman money when you're in debt. Like, I'm just not.
Well,
maybe it's because I was raised. Exactly. That's exactly it. I think it's actually pretty on point there.
Yeah. Now I need less income to cover, my expenses.
Exactly.
So.
I see Mr. Hodl Pig say, "What watches you buy?" I got a little bit of exposure to I'm not balling, but I did get some exposure into Rolex and Grand Seiko were the two like bigger brands I was interested in getting into. I got into
Breitling.
Actually, the Breitling was going to be what I got the Grand Seiko instead, which it's not going to focus, but this thing is literally beautiful. It's Japanese. That's why I'm half Japanese. So I was really interested in the Grand Seiko brands. And so I got a couple really nice ones there. And then a couple of I got into vintage Rolex, which I've been wanting to get into. And then a couple of the, what are they called? What is it called? Let me look it up. Hold on. I'll remember it here. It's super dumb because it's the watches from Interstellar. I was obsessed with them.
Yeah.
I forget what they're called. It's like the Interstellar watch. It's a certain brand. I was already going to get that brand watch. I was curious. Oh, Hamilton. There's a couple of Hamiltons I wanted anyway.
Yeah, Hamilton is like if I was going to buy a watch, it would probably be a Hamilton first. But like my dream watch would be the Breitling Navitimer.
So Sam ended up getting it's the CMO. I live with him. He ended up getting a Breitling. It's beautiful. It's blue. I forget exactly which one. It's really nice.
I think it's probably the Navitimer, the blue dial Navitimer. Yep. Oh my god! Like
it's
one day that'll be my YouTube check.
Yeah, there you go. But for me, the Apex #1 that I'm looking at is it's called like a Patek.
Patek Philippe.
It is Patek Philippe. The one I want is the one I really want is unfortunately over $100,000. And I was like, well, that'll be something I buy if I'm mega rich one day.
Those are crazy.
Aim for
that's
that.
That's another level.
It is, but so I mean, there are plenty. I think they're called the let's see, the Nautilus, the Patek Philippe Nautilus is the one I love, but they're over $100,000. The ones that are a little bit more affordable. I gotta see if it'll pop up here in my recents. I end up looking at them like every other week. They're not, but a lot of the ones I really want are more in the next echelon of watch, with they're between 25 and 60K, which are just like, that's great. It's just like, I would never drop that kind of money on a watch yet. I got to be really balling, but it will happen one day. One day I will work up to get there.
I could do 6 to 10K on a Breitling Navitimer, but that would be my max. That would be my max. And yeah, but look, like watches, like some of they'll have gold, they might have diamonds, they have, like there's a value proposition that isn't totally disconnected from Bitcoin.
In my head, like the watches, in my head, the watches are like, I don't even look at them as an asset. They're just like, they're assets, but in a different way. Not to sell and appreciate value, but to like, there are multiple examples I can think of now in like real life events where it started a conversation that it would not have started that conversation without it. And because it's like, for me, like, it's not really about getting to Rolex. There was just one vintage what I wanted. It wasn't even that expensive, but I was just like, there are some where you're like, especially if someone notices a Grand Seiko, I'm like, wow, you get it. And so I know that like people who are like really in the watch world, if they see like a young dude wearing a Patek, they're going to be like, So you didn't get a Rolex? Like, okay, so that means you actually wanted to watch because you like watches, not just to flex on like these guys on yachts kind of thing. And that was always the appeal. Cause like I remember Gary Cardone even said a couple times, he was like, I see these idiot guys, you know, rolling with like a watch they can't afford on their wrist, usually a Rolex. And I was like, yep, there it is. Like, it's hard to flex. Like if you buy a Rolex, you're usually flexing on like noobs. You know, if you buy like a different brand that's nice and you know you got that because you really like the watch and you think there's value there, it's a little
like
different.
Hamilton.
I mean,
Hamilton
exactly.
shows, I think Hamilton is like one of those brands that, like it shows that, like you're not just like, you're not a total noob, but you're also not like super rich and like balling. You're not like hardcore into watches, but you're like enough into watches. So
exactly,
that's kind of like, I'd probably get a Hamilton, the khaki.
Hamiltons are sweet, dude.
One.
Yeah,
no,
I agree with that. One day, if you guys see me wearing the Patek, just know that I made it. If I'm wearing a Patek, you know that Kate has echelon. He's made it out of whatever he was in before. I see it says Swatch Moon is cheap and cool. I'll have to check that one out. It's interesting. And then it says bought a gold on a gold presidential Rolex sold for a 10K. Oh man,
damn. Jeez. I thought that they held their value. I thought it was like general, like, you know, rare guitars is another one that if I ever see tokenized rare guitars where I could buy like a 59 Les Paul Sunburst for like a token in it.
Yeah. That get into
cool.
That? Really?
Yeah.
Okay.
Rare guitars are like, you should check out some of the like old Les Paul. They're like $500,000 and they're going higher.
Okay, so I know that the watches are going down a little bit. Like they may have bottomed or like slight bottom, but they're not looking good. Like the Rolex chart's rough, dude. That's why I got in because I was like, oh look, the watches are down. Bitcoin's at a place I don't really want to full port into. Like this might be my only chance to get into some of these vintage Rolexes that I want at a price that's like pretty decent to get into the Rolex brand. You know, for me, I just wanted like one, just because I was like, sometimes you got to flex on the noobs and you want to wear the Rolex. But if you're into like a nice party with you know, some of these higher level people are probably not going to roll in with that. But
oh yeah, it looks good. This is a chart. I would buy this chart.
Yeah,
the Rolex,
there you
Rolex
go.
Index. I would buy.
Robert is bullish on the Rolex chart. We need a tokenized. That would be interesting. I mean, I'm not sure how that would happen. Like
rare guitars.
How would that even work?
Same as the wine. They do tokenized rare wine. I don't know anything about wine. I don't drink. But guitars or cars, like those would be the two that I know well and that I could get into some tokenized.
What kind of what's your dream car? What would be the dream car that you either drive or you invest into?
Probably a GT3. Probably GT3. Yeah, probably a GT3 RS, but
nice.
Probably never gonna happen.
It'll happen, dude. Your YouTube is popping.
Those things are
going to crush. I would be very surprised if you don't get to 1 million subscribers the next few years. I mean, you're kind of growing at a crazy pace.
That's literally, I get so many comments that are like, "Oh,
it'll
this channel's going to 1 million. This channel's
it'll get there."
I'm like,
if you just don't stop, it will get
1 million
for sure. You know, so like I'm not guaranteeing that you will, but there's so many people, especially on TikTok, where I saw early, like 20, 30K. And I literally was like, they will be at 1 million in 1 year. I don't know. TikTok is ridiculous growth, like the way they can grow so fast. YouTube can be like that. YouTube, you probably need some short action, and with with this type of content, maybe a little bit harder. But like, dude, no doubt. If you keep doing it, like the content slaps, and it's like there's something you can't replace, which is expertise and like you can tell that you are trying to distribute value. Like if you were a ChatGPT prompt, it would be like I could put it in and be like, I want a value-driven video, and like that's how I think about your channel, which is just it's just so uncommon,
rare,
so rare, so rare on YouTube, and even the channels that do it, they can't get the views. So the fact that you are getting the views is like there's definitely something here. So like everyone who's watching,
I know something.
Subscribe to his YouTube.
I know that there's something like I'm not trying to discount. Like I can feel like there's something legit here. Like I mean, it went from 0 to I just crossed 29K today.
Yeah, almost at 30.
Like, what is that, like 5 months, 6 months, something, 7? And so so like I know something's there, but like 1 million. Like I know I'll probably in the next year or two I'll probably get to like 100K, 200K. Like that feels reasonable to me. But when people tell me like 1 million, I'm like, no way. That's like I just feel man, that'd be crazy. Yeah, maybe a GT3 then.
No, I'm telling you, YouTube money can get crazy. YouTube money can definitely get crazy.
Oh, dude, like I know a guy that's got a 300,000 subscriber channel, and he makes like 50K a month.
Mm-hmm. That is right.
So,
That's like, he could, I mean, that's probably without, like, you know, we've chatted, we'll chat more offline, obviously, but like there are many ways to make money, you know, on YouTube. One of them is through ad revenue and things like that.
yeah.
But dude, like, yeah,
It's all the other stuff. So he makes 50K ish off ad revenue, but then he makes another like 40 to 50K, I think he said, on selling individual course sort of thing. Like, which that's one thing I know I need to be doing, which is like starting to build, like, because a lot of my followers don't know anything about like people in the Discord are always like, you should do a video on options. I don't know anything about options. Like, you're always talking about because I tell them the little day trades I make and stuff, it's all options. And they're like, you know, I don't know anything about options. Like, do it. And so I'm thinking ahead to like, okay, well, I could do like what is a bid ask spread? You know, how does a market work? You know, like, what is an equity? What is a dividend? Like, and then just go through like everything, try to document everything that I know. Cause there's like, to me, I forget how much I've absorbed over the past 5-ish years. But then, you know, you like interact with someone who's like totally new to all this and they're like flabbergasted that you know so much. And it kind of reminds you like, oh yeah, I kind of know some stuff. And if I just took the time to like make little like, you know, our master class on options and like, you know, what is delta? What is gamma? You know, that kind of thing.
No, there is a huge opportunity here.
And then you sell those and man, it's like a whole other income stream. And
Yep. Yeah. 1,000%.
29K.
Close. We got to get him to 30K before. I don't know how fast it's growing, but we got to get to 30K before December, or at least by Christmas at the latest. But guys, if you're watching right now and you're in the stream, Economics Unmasked, just go to Robert's YouTube. If you're watching on X, just right above our faces, just click his handle, Infra, and go to his YouTube, or the link tree is in his bio, and then YouTube is like the second or third one. And give him a subscribe because we're trying to get him to 30K. He should be there already. He should be at 50. Either way though, like this is honestly epic. Like it's like a win for the content creator community. Like this way I think about it, it's like YouTube is so hard. I've tried and I've grown on YouTube. It is so difficult to grow on YouTube, like insanely hard to get views on YouTube, and especially to convert subscribers, to get people to be like, I'm coming back, and not only I'm going to make sure by subscribing. Like that's a hard thing to do. So if you're on YouTube watching, again, give him a subscribe to the Wolf. If you're watching on Wolf YouTube, by chance, it's probably like 3 people watching, but if you are, definitely subscribe. But yeah, man, you're killing it over there. And do you have any, I know you posted earlier, but do you have any idea what the next video is going to be, or is it more like impromptu?
Well, kind of wait. These days I'm kind of waiting. Every morning I wait for SOFR to come out for the prior day. And then with the standing repo, because like I just kind of keep feeling like there's gonna be, I just have this feeling in my gut, kind of like there might be a 2019 sort of thing again.
Oh wow!
So I always like wait for that, and if it's not super remarkable, then I'll do something else. But yeah, maybe Japanese yields, maybe the yen carry trade stuff we were talking about. That's probably because the 10-year just made like a new all-time high. Yeah.
Oh wow! Okay. Nice.
High. So I might, Japanese people like the Japanese videos, so. I'm kind of like learning more. I watched the Japanese bond market, Japanese equity, Japanese economic data. I watch all that like way more than I ever thought I would know about Japan's economy and their bond market. Probably Japan. Yeah.
All right. Well, I'll be looking forward to it. And again, for anyone who's watching back at home, please subscribe to Robert's YouTube. Give him a follow on X. You're going to find more regular. Well, actually, you're pretty regular on YouTube. I was going to say you find him probably just as much on X as well. Get him to 30K. We'd like Robert to be rocking a Hamilton as well as a GTR. We'd like to get him in all the things. G3 RS. But yeah, man, I appreciate it, and it was fun getting Dave in here as well. Nice change of pace for a stream, and we see him on Spaces all the time as well. But yeah, guys, please like and repost the stream if you're watching on X. We'll be back on Spaces tomorrow at 11 a.m. Eastern with the traders, more like the day trading crew, who, by the way, are very convinced the 4-year cycle is in play. I think, and a couple of them, like Landy and a couple others who kind of play in both spheres, like on the macro side and the trading side, they kind of hold this like in between, which I find myself more in. It's like, I'm not so much of, I don't know about the idea of the 4-year cycle, but I could see us getting into a point where we get like the distribution we were talking about, it just taking a while. It'd just be like a slow grind down and then like a slow ride back up. But that kind of thing I've seen, it could take a year. Like we saw with after post-Trump, like that could take a year. Like it could be one of those things where it just takes a little while. So anyways, I'm not sure. I have no idea what to expect. We do a little of speculation. We like to go back and forth with the traders, the investors, but we'll be back on for the 3 p.m. macro space. 3 p.m. tomorrow. And we'll see you guys there for that one. So Robert, have a great rest of your day, man. I think I have a call here in like 2 seconds. I just realized I just got an alarm and I was like, what is this alarm for? I was like, oh, it's
no worries.
So man, we'll see you in the next one, and we'll see everyone back at home. We'll see you tomorrow, hopefully at 11 a.m. Eastern.